Hey, welcome back to Market Focus. Thanks for taking the time to join me today. It's March 7th, and I want to give you a very brief update on the current stock market environment and where I think things are headed in the near term. We've had a massive rebound in the U.S. stock market. The S&P 500 index is up about 20% from the December lows, and we're just about 6% below the all-time highs now. The main driver for this, guys, is that investors are no longer fearing that the U.S. economy is headed into recession anytime in the near term. Current data would suggest to us that right now we don't expect to be in a recession until late 2020 or even 2021 here in the U.S. Another significant factor is that the Federal Reserve has also changed their tone and is suggesting that they have hit their 2% targeted inflation goal and that they do not see a need to continue raising interest rates much at all. In fact, we may get only one interest rate hike this year at most. Also, we've seen a significant improvement in the tone of negotiations between us and China over trade, and the market is pricing in a high likely resolution of the trade war in the near future, which I do expect to be the outcome. Now, over the last couple of weeks, the stock market, the S&P 500, has been fluttering right around above and below the critical 2,800 level. That's an important psychological marker, especially for institutional investors. And a lot of concern is starting to creep into the market that we've seen some weakness over the last few days, and maybe this will lead us into the next major market sell-off. We've seen some global economic data roll over, suggesting that we could be headed into a global recession. However, my opinion is that we're more likely in a consolidation period coming naturally after a strong market rally, and that this will likely not turn out to be a more significant correction. And here's why. Right now, the U.S. economy is growing at a very healthy rate of about 2.5% this year. Inflation is going to be 2%, interest rates are still on the low side, and the unemployment rate is still sitting in the high 3% range. Consumer confidence is also near all-time highs. And stocks right now are trading at very moderate levels. The price-to-earnings ratio on the S&P 500 index is just 16.5 times. Now, certainly the global economy has weakened, and about a third of the globe's economies are already in contraction, including China and the majority of Europe. However, stimulus is already beginning to roll out, and I think we will look back on this period as actually a trough in global growth rather than the beginning of a recession. I think a recession in all likelihood began several months ago. Now, a lot of investors missed out on the stock market rebound and are sitting waiting for an opportunity to get back in. And I think with the benefit of hindsight, we'll be able to look back on this current period as that opportunity. I do think that any weakness we see in the near term will likely be met by a lot of buying pressure, and then this will turn out to be more of a near-term consolidation period and an opportunity rather than a more significant risk. Thank you for taking the time to watch today.